Welcome to Friday Takeaway. It's corporate earnings season, but there were pretty significant moves at Hap Seng Plantations and Pecca. But before that, the Fed may have been upbeat in its latest comments, but it sent shivers through most of Asia with stocks in Japan, Hong Kong and South Korea closing lower. Next week, the Fed's new chairman, Jerome Powell, assumes a hot seat, but all bets are off as to whether he's a hawk or a dove. Back home, the directors of notorious gold investment firm Genneva got sentenced to 8 years in jail and 1 million fine each. A heavy punishment for sure, but the judges overseeing said it was necessary given the number of people swindled. But more disheartening, Transparency International said that Malaysia has an integrity crisis, proven by its slip in ranking on the Corruption Perceptions Index. The question now is, what will the government do about it? The CI performed 1.03% higher to 1,857.26 points this morning, from 1,838.18 points last Thursday. As people return from the CNY break, market sentiment now saw some lift from the corporate results season, and hopefully that will prove enough to sustain it. Sabah-based palm oil producer Hap Seng Plantations bought into its brethren this week. It focuses in the upstream activities in the palm oil sector, with a current total land bank stands at around 40,000 hectares, of which 90% is planted. Hap Seng has a total of 16 estates and 4 oil mills, all in Sabah. It is acquiring a 55% stake in fellow plantation brother Kretam Holdings for 1.18 billion ringgit to expand its plantation land bank. Although it will trigger a mandatory takeover offer, Hap Seng wants to keep Kretam's listing status. Following the proposed deal, Hap Seng's land bank and planted area is expected to increase by 59.2% and 54.3% respectively. But more than that, it allows Hap Seng a foothold into the downstream part of the business. But CIMB say that the price that Hap Seng is paying, which is about 97,000 ringgit per hectare, is significantly higher than its own estates, priced at about 53,000 ringgit per hectare. The deal could also dilute Hap Seng Plantations' earnings by 44% for FY19 and will raise its gearing ratio to 0.97 times, which could affect dividends. Now, despite its reservations, CIMB is keeping its whole call on the stock with higher target price of 2.57 ringgit. This morning, it was trading at 2.56 ringgit. And overall, the stock has 2 buys, 1 sell and 4 holds, with target prices ranging from 2.30 ringgit and 2.89 ringgit. Pecca Group saw a boost from an upgrade. It manufactures automotive leather seat interior for various types of cars. It also distributes and installs aircraft leather seat covers and other leather-related products. Pecca shares jumped 4.6% after Afin Huang upgraded the stock to buy with a higher target price of 1.52 ringgit from 1.35 ringgit. Analysts believe that Pecca shares have room to grow based on strong demand for the new MYVI model and new model lineups for Toyota. Its revenue is expected to grow at a CAGR of 6.4% for FY17 to 20 as more mainstream cars go leather. It is also looking to diversify into child and infant seat business and is eyeing Thailand auto market. But despite those grand plans, Pecca has delayed its capacity expansion basically another 3 to 4 months, and even then the 50,000 unit expansion may not materialize due to weak consumer sentiment. To date, Pecca shares came down 11% to 1.35 ringgit this morning, but all research houses are calling buy with target prices ranging from 1.52 ringgit and 1.95 ringgit. TA Securities says that Pecca prospects remain intact with possible new OEM contracts from Mercedes and Honda.